Hi everyone, welcome to the session. In this session, I am going to discuss about working capital management under management accounting. Before I get on with the session, please make sure to click the subscribe button if you would like to see more videos on accounting and management accounting lectures. So let's get into the session. Let's go through the question. AG Private Limited is a manufacturing and trading company that has recorded sales of 600 million for the year ended 31st March 2019. 20% of AG sales were made on cash basis with a gross profit margin of 25%. Credit sales have given AG an additional gross profit margin of 10%. So 20% of the sales are on cash basis. Then how about 80%? So 80% on credit basis. 20% of the cost of sales was incurred on labor and overhead expenses, and the balance amount was incurred on materials. Now what they are saying is 20% is cash sales and 80% is credit sales. So 20% of cost of sales was incurred on labor and overhead expenses, and the balance 80% incurred on material, of which 10% of materials were purchased on cash basis. So the materials, so 10% of materials were purchased on cash basis. So 90% will be on credit basis. AG takes 10 days on average to convert materials into finished products. AG holds 13 days sales equivalent in its finished goods stock. So here what they are saying is 10 days on average to convert materials into finished products. Now you have the raw materials. So these raw materials will be converted into finished goods. So this conversion takes 10 days. This conversion takes 10 days. Normally, this process is known as working progress. So this is the raw material conversion cycle. So raw material into work in progress, the work in progress into finished goods. So it takes 10 days to convert the raw materials into finished goods. Then the finished goods holding period will be how many days? 13 days. So basically if you want to find out the total inventory holding period. So you need to identify the raw materials holding period, then the work in progress and the finished goods. Now you are given the work in progress 10 days and the finished goods 13 days. So you need to identify the raw materials or the inventory holding period. Then the following information has been extracted in the draft financial reports of the company for the year ended 31st March 2019. The raw material stock as at 31st March 2019, 81 million. Accounts receivable as at 31st March 2019, 150 million. Accounts payable as at 31st March 2019, 38 million. So these additional information is also given, and consider 365 days for a year. So based on that, you are required to compute the followings. Inventory turnover period, you need to calculate the inventory turnover period. Accounts receivable days, accounts payable payment period, cash operating cycle in days. Then the second part is you need to draw a diagram of the cash operating cycle showing the item 1 to 4 in A above. So basically after calculating all these things, you need to show a diagram. You need to draw a diagram showing the cash operating cycle. Okay, so let's analyze this information. Now the total sales 600 million for the year ended 31st March 19. So let's find out the total sales. So you have total sales of 600 million. So this 600 million, of which 20% is cash sales and 80% is credit. Is that clear? 20% cash, 80% credit from this 600 million. Now what other information is given? 600 million for the year ended 31st March 2019. 20% of AG sales were made on cash basis with a gross profit margin of 25%. Then credit sales, which is 80%, have given AG an additional gross profit margin of 10%. So which means how much is 10%, 20% of 600 million? Which is 120 million. 80% of 600 million is 480 million. So this is credit sales, this is cash sales. Now this cash sales 120 million, the profit margin is 25%. However, the profit margin on credit sales will be 25% plus 10% additional margin. So which means 35%. Now, what does it mean, the profit margin? So what is the difference between profit margin and markup? Let's say your selling price minus cost of sales will be your profit margin. So profit margin is 25%. So let's say your selling price is 100 and cost of sales will be 75%. 100 minus 75% will be your profit margin. So therefore, of this 120 million, then how much will be our profit margin? 120 million times 25%. So that will be 30 million. So what is the cost of sales? Cost of sales will be selling price minus your profit margin 30 million, which will be 90 million. Your cost of sales will be 90 million. Please remember, you need to calculate the profit margin on the total sales. 25% on 120 million, so that will be 30 million. Don't confuse with the markup calculation. What is a markup? Markup is the amount by which the cost of product is increased in order to derive the selling price. So in this case, your cost is 90 million. By how much you need to increase to arrive at 120? You need to increase by 30 million. So which means 30 million divided by 90 million. That will be 33 and 1/3%. So therefore don't confuse with this profit margin with markup. So simply what you need to do is you take 25% on 120 million. So likewise, your credit sales 480 million. So just simply calculate the cost of sales. You just take from 480, you just take 65% because the profit margin is 35%. Your cost of sales will be 65%. So when you calculate 65% on 480, so what will be the amount? Which will be 312 million. So basically your cost of sales from cash sales will be 90 million, and from your credit sales the cost of sales will be 312 million. So thereby your total cost of sales, the total cost of sales will be 412 2 million. Now let's move on to the other information. Now 20% of the cost of sales was incurred on labor and overhead expenses. So now we identified the cost of sales. Cost of sales was 402 million, 402 million, of which 20% is for labor and overhead expenses. So let's calculate labor and overhead expenses. Labor and overhead expenses, 402 million times 20%. How much is that amount? That will be 80.4 million. Then the balance amount was incurred on materials. So which means out of 20% from the total cost of sales, 20% goes to labor and overhead cost and 80% goes to materials. So of which 10% material were purchased on cash basis. Okay, now let's calculate material. Material will be 402 million times 80%. So what is the amount here? 321.6 million. So that will be the material cost. Out of this material, 10% on cash and 90% on credit. So how much is 10%? 32.16 million. This is cash purchases, and 90% will be 289 million. So this is credit purchases. Then AG takes 10 days on average to convert materials into finished products. So this part I already explained. The work in progress will be 10 days and AG holds 13 days sales equivalent in its finished goods stocks. So that is the finished goods holding period will be 13 days. So we need to identify the raw material inventory holding period. The following information has been extracted. So you are given the raw material stock as of 31st March 81 million, accounts receivable balance 150 million, accounts payable balance as at 31st March 2019 will be 38 million. Okay, so let's first of all we'll calculate the inventory turnover period. So we'll calculate inventory turnover period. So first one, inventory turnover period. So this is basically for raw materials. So how do you calculate the raw material holding period? Simply you take raw material stocks divided by cost of sales times 365 days. So how much is the raw material stock? So raw material stock is how much? 81 million. So this 81 million has to be divided by the total cost of sales. So cost of sales pertaining to raw material purchases, how much is that? So we calculate our total cost of sales 402 million, of which 80.4 million for labor and overhead expenses, 321.6 million for material purchases. So therefore we'll take 321.6 times 365 days. So that will be how much? So if you calculate that, you will get 92 days. Now let's move on to the second part. This is the first part, accounts receivable days. Accounts receivable days. The second part will be accounts receivable days. How do you calculate this? Simply you take the accounts receivable balance divided by credit sales times 365 days. So you are given the accounts receivable balance. How much is the accounts receivable balance? 150 million. So 150 million should be divided by credit sales. How much is the credit sales? Credit sales will be 480 million because the total sales consist of 600 million, of which 20% cash, 80% credit. So credit sales will be 480. So accounts receivable balance is 150 million, 480 times 365 days. How much will be the number of days? 114 days. Now let's move on to the third part, accounts payable. Accounts payable days. How do you calculate this? Accounts payable divided by credit purchases times 365 days. So how much is the accounts payable balance? Accounts payable will be 38 million. So 38 million should be divided by credit purchases. Now the total material purchases was 321.6 million, of which 10% cash basis on cash basis and 90% on credit basis. So therefore accounts payable days should be calculated based on credit purchases 289 million. So accounts payable amount is 38 million divided by 289 million times 365 days. So that will give you 48 days. So that will be the answer for part 3.